let's try to find out. We're going to bring in now Adam Button of Forex Live. Good to see you, Adam.
Hi, Greg.
All right, so you always have the moment where like either you look at your portfolio or you look at the Canadian dollar and you say, yay, it's a winner. How long is it going to last?
You know, I think the risks are growing of an overshoot here. We saw this really strong flourish to the end of the year for the Canadian dollar. Some of that might unwind in the next few days because you don't want to take a signal from that Christmas Eve to New Year's period. But, you know, it's setting up, and you can build a wall of worry for the Canadian dollar. But we did that last year, and you see now that Canada, it's not great, but it manages to hang in there. And a lot of the things that are going wrong elsewhere are kind of going right in Canada. And I don't see any reason why that can't continue and why that won't accelerate into 2020.
Yeah, I guess it really came down to last year, central banks driving almost everything. They drove the markets, they drove the currency trade. There was a time, and Governor Poloz was fond of saying it, that if you mapped the Canadian dollar and crude prices, it was like two train tracks running parallel. Obviously, there are years when that correlation breaks down. Was it an oil trade or a central bank trade last year?
Well, I think some of the oil trade is coming in now. I think that there's a rethink going on about Canadian oil. I mean, there is, if you look at U.S. shale, we were told that at $60, Canadian oil couldn't make money and shale was going to make money at $20. Instead, it's turning into the opposite. We had some Canadian oil sands companies make a lot of money last year at $60, and nobody in shale made money. And there's a real chance of a bust in U.S. shale this year and a lot of money coming back into Canadian oil. And I think that's a major risk coming into the year. And if we get to something like 120 in dollar CAD, so it's about a 5 or 6 cent rise in the Canadian dollar, that is probably the scenario that unfolds.
Okay, so before we get off the Canadian dollar, I just want to ask you, many Canadians, we've been mild in this part of the country so far, but as winter really gets a hold, you want to head south, you have to buy American bucks. Can we be looking at a much stronger Canadian dollar by the time we hit March break?
Yeah, I think we can. You know, there's a really nice setup for global growth coming into this year. And, you know, one of the really, if you look at manufacturing, you know, the data has kind of bottomed out and just skidded really along the bottom. So one of the numbers that came out today was the JPMorgan Global Manufacturing Survey, and it shows a dip right back down to 50 in December. And so we have now these Fed cuts, we have other central bank cuts, we have a U.S.-China trade deal. You know, you need to see within the next 2 or 3 months some sort of uptick in manufacturing sentiment to feed back into that Canadian demand for commodities and global growth. I think that's the real indicator you want to watch. I think it's going to turn around, but, you know, the data needs to come in now.
Now, Adam, I understand you have an interest in the Aussie dollar and some moves that are being made there. What are you seeing?
Yeah, the chart that I'm watching closest right now is the Aussie dollar against the U.S. dollar. Now, the Australian dollar generally tracks with the Canadian dollar, but it underperformed last year, and it's underperformed for a number of years. So it was below the 200-day moving average for the last 23 months before breaking above it just in the last 2 weeks. So that's a great sign for the Australian dollar. And as we talk about central banks and following them, and that was really the lesson of 2019, well, the Australian Central Bank has been talking about a gentle turn in the economy. Now, we can see right now that there are bad fires in Australia, but it was the best year in the Australian housing market since 2009 last year. You know, those rate cuts are working. And as that filters through, and if we get some global growth, the Australian dollar is very beaten down, and it can have a very strong year in 2020.
Now, the British pound, just when you thought the Brexit drama was over, it ramped up again, promising this to be another confusing year around that little agreement. What do you see for the pound?
Well, yeah, it's such a disappointing theme because you want Britain to come out and say, you know, we're open for business, let's stimulate, let's get the economy going. And they're talking about all kinds of tax hikes and some things that aren't really going to be stimulative. And so there's a drag there, not the sort of bump you'd expect coming out of an election, or at least it hasn't been sustained. Now, we saw about a 350 pip rally from Christmas Eve to New Year's Eve, and a lot of that's coming out today, about half of it. But I think that puts the pound about where it should be. We're at 131 in against the U.S. dollar. I think there's going to be a drift up, and I think if there's a trade for the next 10 years, say, the pound is probably it because it's a strong economy, good workforce, and doing a lot of things right with some fiscal and monetary space. But we're not going to see it here right away. It's going to be a grind like it always seems to be with the pound.
Always great to get your insight, Adam. Look forward to our chats this year.
Thanks, Greg.
Adam Buttons, the Chief Currency Analyst at Forex Live.